All right, good morning everybody and welcome to today's daily market forecast for Monday, May 22nd. This webinar is brought to you by OctaFX, the award-winning Forex broker offering some of the lowest spreads in the industry. Let's jump right in. Quick disclaimers. We got a risk disclaimer. Trading foreign exchange on margin carries a high level of risk and may not be suitable for all investors. You should not invest money that you cannot afford to lose. Secondly, a hypothetical trading disclaimer. The information in this webinar is provided as general market commentary and does not constitute investment advice. That means we're not giving out specific trade recommendations. The webinar is more educational by nature. Quick look at what we'll cover today. We're going to cover the top stories among the major currencies, key support and resistance levels, emerging chart patterns, and at the end we're going to touch on some trading strategies. Right, the big story in the market this week and last week is the escalation of the investigation into Russia's involvement in the recent US election, which pressured the greenback last week. We saw 4 out of 5 days being selling days. US dollar index ended the week with fresh lows, lowest levels since the US election on November 9th. We also saw some sharp selling in the equity markets, but the equity market stabilized on Friday after sharp selling earlier in the week. Let's jump over and take a look at the dollar index chart. This is the dollar measured against a basket of 6 different currencies, the broadest measure of the US dollar. So we can see last week, series of major selling days, red, 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 one green day on Thursday, and then some sharp selling to end the week on Friday. Next up, we got the euro, which saw very much the opposite type of thing going on. The euro powered higher against the dollar on Friday, reaching the highest levels since November 9th, actually, the date of the US election. What we're seeing is that we have lower political risk in Europe now that Macron's been elected, while at the same time we've got increased political risk in the United States with the scandal surrounding the investigation of the Trump presidential campaign. We also saw some strong economic data coming out of Europe, boosting the euro. We saw better than expected producer price index and also Eurozone current account data helping to lift the euro to those 6-month highs. Let's take a look at the chart. Here we can see euro pushing higher to highest levels it's been in quite some time. Nice fat green candlestick there. Next up, British pound. We also saw positive economic data last week. We saw the British pound push through 130 against the US dollar, lifted by better than expected retail sales. Later in the day we saw a strange thing. It plunged more than 100 pips in 12 seconds. Mini flash crash. No one really knows what caused it. There's speculation that it was a story that was published on Zero Hedge that was pulled down shortly after being published that caused that mini flash crash of 100 pips in just a matter of seconds. The British pound ended the week near highs after better than expected CBI industrial order expectations data, so more positive data coming through for the British pound, helping giving it a lift. Take a look at the chart and we can see that, yeah, nice strong uptrend and ended up back up above 130 on Friday. Finally, we wanted to talk about Bitcoin. It's an interesting story. Bitcoin, the cryptocurrency that was launched just in 2009, has rallied to fresh all-time highs above $2,000. It's up over 100% in 2017. CoinDesk reported that the total market capitalization of all cryptocurrencies has now reached an all-time high, surpassing $60 billion. So some real positive news there for the cryptocurrencies. So without further ado, let's jump into the charts and look at some key support and resistance levels. Moving over, now we're looking at the euro against the dollar, the euro USD. We can see major downtrend resistance here that's been broken through. Trendline support to the downside here. This 200 period SMA, simple moving average, which came into play clearly at this point. So this chart is basically telling us that we're really in bull territory, where the buyers are in charge here in the euro, charging higher. We're above the 200 period SMA, the simple moving average. We burst through this major downtrend line, and there's not much in the way of not much in the way of resistance until we get up to this level here. And we might expect to see a pause in the buying at that level. But for now, we're very much in bull territory. We can see that the RSI has not yet gone into the overbought territory of above 70. So opposite of what's going in the dollar index, we got very much a buyers in charge in this market. Moving up, we're going to take a quick look at the Canadian dollar. We got a nice up channel in the Canadian dollar, and we'll be watching this currency pair on Thursday with that OPEC meeting in Vienna that's taking place, where analysts are expecting production cuts to be held and possibly even increased. So we'll look for some volatility in the dollar CAD later this week. But for now, we can see its price is confined within a very well-defined upward channel here. So we're looking for resistance up here. We're looking for support down here. And if price is able to break through either of those levels, we're looking for follow-through in terms of price movement. Next up, let's look at the pound. We can see, similar to the dollar, that the pound is trading above. This is the 200 period simple moving average. Called out that moving average crossover pattern, the golden cross, very bullish indicator. And we had some major horizontal resistance that price broke through, and it's hovering right around that area now. So we have positive economic data coming out for the British pound. We got this positive technical indicator here suggesting that it's a good time to buy potentially on the daily time frame. And I'm going to jump over to a different chart where I've drawn up the Fibonacci levels. So as a target, I'm thinking for the upside, 132.48 might be a good level if you're trading on the long side, if you're buying. You can see that this 38% level is certainly coming to play, and we might expect support at that level again down at 128.20 thereabouts. Next up, we're looking at one of the currency crosses, the euro against the New Zealand dollar. We can see again the daily chart. You can see the price is confined within a well-defined up channel. We're above the 200 period simple moving average. It looks as though price is beginning to test this up trend line here. So let's keep an eye on this currency pair and see potential follow through if price is able to break through this resistance level to the upside. Gold on the daily chart. This is an interesting chart. Look back here, we have a death cross, which is the opposite of the golden cross. So it's the 50 period simple moving average crossing below the 200 period, giving a very clear sell signal. And if that sell signal had been observed, you can see that there was a very nice down move after it. We can see the moving averages coming together again, and looking at there being a potential golden cross with the 50 period simple moving average potentially crossing above the 200, which would be a very bullish signal, but it hasn't happened yet. When you see the two moving averages coming together, it's typically an indicator that there's a potential change in trend coming up. We can see with gold also confined within a nice upward channel here. So looking out to see if this golden cross forms here, and if price can come up here and test this upper trend line channel. Next up, we're going to look at the Australian dollar. Opposite story, we've got a downward trend channel, price trading below the 200 period moving average. Looks like price has come up here and is testing the upper trend line of this channel. So we're looking for potential breakouts here. If it does, price is able to break out here, we're looking for resistance at the 200 period simple moving average here. In the last session, we talked about a simple moving average crossover system where we looked at the 5 and 10 period, actually it was the exponential moving averages. An exponential moving average gives greater weight to the more recent periods versus a simple moving average. But today we're going to talk about pin bars. And I think this is a really interesting trading strategy to start out with because it's very simple and it brings in some quite intuitive concepts that will help you in your trading, I think. So these are called, I'm looking at a bar chart this time because the people that typically trade this system seem to favor bar charts. You could use it on a candlestick chart. I'll flip back and forth so you can see. So very easy to flip back and forth between the bar chart and the candlestick chart. But yeah, this trading concept where the name Pinocchio bar or pin bar was coined by an analyst called Martin Pring. And the concept behind it basically is that you have a bar that sticks its nose out as if it's going somewhere, but it's in one direction, but it's actually lying. It's kind of like Pinocchio's nose sticking out, telling a lie, and it's actually, prices actually wants to go in the other direction. So here I've gone backwards in the chart here in the Euro USD daily chart to try and find an instance of a good instance of a pin bar, and we've got one here. Let me zoom in a little bit. So here we can see that price opened here, it traded all the way up here, but then price reversed and came down and traded below the open, which is a very bearish indicator. So if I make it into Japanese candlestick quickly, in Japanese candlesticks, this is described as a shooting star pattern. So you can see it's a red candle because price closed below the open. It went up and tested a new high, but the buyers were quickly on the back foot. Not only did they just retrace to where price started, they retraced even lower. So that tells you something about the psychology of the market, and that the buyers were lacking conviction, and that you see there's going to be a potential change in trend at that point. So in the instance in this pin bar system using the bar chart, there's not a lot of rules. They're looking for the high of the bars on either side of the pin are described as the eyes. So here's one eye, there's another eye, and the open of the close of the pin itself, which is this bar, must be within the left eye. So in this case, it is indeed within the left eye. Things to look for: a long nose, in other words, a long line poking out here, and a long nose relative to the open, close, and low, and also a nose protruding a long way from the prices around it. So the longer the nose, the better. Another thing to bear in mind with this system is that it's great to look for confirmation. And you see this very often where you have a confluence of indicators. So imagine that up here there was a moving average or a Fibonacci level or a major horizontal support or resistance level. When price goes up there, touches that, and then retreats, that's just going to add strength to the signal and the potential quality of and success rate of the trade. So then the next question is: so how do you enter and exit this trade? What's the strategy in terms of entering the trade? So let's talk about that for a minute. The classic strategy for this trade is you see the pin bar form, then you put an entry, a sell entry under here to get in on the short side, maybe 10 pips below the low of this day. Then you put a stop loss sort of perhaps 10 pips above the high here. So again, this is just hypothetical. We're not telling you to place your trades like this. Always test strategies in a demo account is what we recommend. And but that's the kind of the classic way of entering this trade. There's different ways of managing the risk. Sometimes people even draw Fibonacci levels on the pin bar itself and place the stop order at the 61 percent level of the pin bar itself, this kind of thing. But yeah, the classic way of trading it is, yeah, you'll put maybe a sell stop entry here below the market, and you'll get into the market when the next bar trades down there. Conversely, you're looking, it's going to look just the opposite on the buy side, so it will have a long tail coming down here, and then you'll look to enter the trade with a buy stop perhaps above the market, and you'll protect yourself with a sell stop loss order below the bottom of the pin. Again, you can also trade this system looking at Japanese candlesticks, and the shooting star is one of the most reliable candlestick patterns, and the opposite of the shooting star, what you see at the bottom of a downtrend, is called a hammer. So we'll get more into candlestick patterns later on. Just keep in mind, guys, also when you're trading these systems, always to take a look at the economic calendar and make sure no big releases are coming out. If there's a major release like non-farm payrolls or GDP, or there's a central bank meeting that day, you ought to pull off your trades right around when that news is coming out, because even on the daily time frame, it's likely to affect the trade negatively, and it'll just the shorter term technical stuff just goes out of the window when there's major economic releases. So that's like a really key thing to remember. Another concept to draw into it is that when you're looking, for example, you're looking to sell here with a potential, with the signal from the pin bar telling you that you got a potential sell signal here. You're going to enter with a sell stop 10 pips below. If you want, you can add more filters to it by looking at the trends on the higher time frames. In this case, we're looking at the daily charts, so we might take a look at the trend on the weekly chart and only take signals that are when we're in a downtrend on the weekly chart if we're getting a sell signal here, and conversely for the buy side. All right, guys, so that just about wraps it up for today. I want to thank you all very much for joining us, and look forward to seeing you back in the room tomorrow.